It's no longer news that Nigerian economy is battling with numerous challenges as a result of series of factors ranging from, of course, COVID-19 pandemic, the hijacked NSAS protest leading to its worst economic recession in more than 40 years. It is in view of this that the Lagos Chamber of Commerce and Industry projected a positive growth path for the Nigerian economy in the second quarter of 2021. Now, subject to the absence of major economic shocks, adding that the projected recovery was expected to be subdued within the region of 1%. The rail sector, which is most affected by these vices, were generally grappling with challenges of infrastructural deficiencies and macroeconomic shocks, with new fiscal policy options available to the federal government for interventions in the rail sector. The Lagos Chamber of Commerce and Industry urged the federal government and state governments to address the overlapping functions of regulation and revenue generation among regulatory agencies for private sector development with reference to the projections of the LCCI. Joining me via Skype to discuss the state of the economy and prospects of businesses in Nigeria is the Director General of the Lagos Chamber of Commerce and Industry, Dr. Muda Yusuf. Dr. Yusuf, it's great to have you join us this Friday.
Thank you very much and good afternoon.
DG, let me start this way. With this projection of returning to positive growth by the second quarter, earlier the finance minister and the CBN governor talked about the first quarter, but considering the reality on ground, COVID-19 second wave, global shocks, and all that we've seen, even in the fiscal and monetary policies on ground, we are shifting figures. And even the global IMF and World Bank has come up with reprojections. The LCCI is still very optimistic that in the second quarter we will witness growth. How feasible is this?
Well, we are looking at these numbers following from the trend that we have seen. If you look at the numbers for 2020, that was last year, we had the worst contraction in the second quarter, which was 6.1%. Then in the third quarter, there was an improvement because we had a lesser contraction of 3.62%. So you could say that the economy between the second quarter and the third quarter, there has been an improvement of close to 3% in growth because there was a reduction in the contraction. Now, we haven't seen the figures for the fourth quarter, but our expectation is that the contraction in the fourth quarter is likely to be less than the contraction in the third quarter. So if you look at the trend, there has been a progressive improvement in the growth of the economy. So we are following from that and hoping that if the pandemic doesn't get worse, if there is no complete lockdown of the economy, the contraction in Q1 will even be much less than the contraction that we are likely to have in the fourth quarter of 2020. And therefore, by Q2, that's Q2 2021, we expect that we'll have been in a positive trajectory. So it is the trend analysis that we have done. And barring any major shocks in the economy, we expect that by the second quarter, we'll return to positive growth territory. And again, when you look at some of the fundamentals that drive growth, first, we have seen that the oil price is recovering. Until yesterday, we were talking about $56 or $55 per barrel. That's a significant improvement over the budget benchmark. Then we're also seeing that the spread of the vaccines, there are prospects locally, there are even bigger prospects globally about the development of the vaccines the distribution of vaccines, that is also likely to moderate the anxiety and worries at the global level. And don't forget that what happens globally has a way of impacting on domestic economic performance. So at the global level, things are likely to also improve, especially with the vaccines that we are seeing. Thirdly, we now have a new administration in the United States. And the United States being the biggest economy globally, what happens with that country also impacts a lot on the global economy, particularly in the area of trade and in the area of multilateral relations. So both in the area of multilateral relations and the area of trade, we are likely to see a much better relation under the new administration in the United States. So when we put all of these factors together, they point in the direction that things will progressively, although slowly, get better. So that was the basis of the projection that we did.
I know it's quite wide. Key reforms that would really boost output recovery and put Nigeria on the path of macroeconomic stability.
Well, we want to see some changes and reforms in a number of areas. In the policy space, in the regulatory space, in the institutional space, and in the structural space. Because these are all the segments of policy and reforms that impact significantly on business performance and by extension on economic performance. Because there is a strong relationship or a strong correlation between private sector performance and economic performance. We can have maybe some improvement in the macroeconomic fundamentals driven largely by the oil price. But if the investment climate is not right, there is very little we can achieve in terms of building an economy that is inclusive and that can create jobs. Because growth is not an end in itself. Growth is a means to an end. And for us to realize the end that we seek when an economy is growing, the growth has to be inclusive. And the inclusiveness of the economic growth depends to what extent we're able to bring on board investors across all sectors and across all levels. That is why some of these other variables that has to do with reforms are very, very critical. We talk of policy reforms or policy changes. We'll be looking at the foreign exchange policy, for instance, to reduce the uncertainty and to ensure that we mitigate the current liquidity challenges that we are facing in the foreign exchange market. We should also be looking at the trade policy. We need a trade environment that is conducive to growth, that is conducive or is compatible or that can inspire investors' confidence. And when I'm talking about trade policy, I'm talking about how we relate, for instance, with issues of import tariffs, export tariffs, to make sure that we have a trade process that is seamless, especially now that we are talking about African Continental Free Trade Area. This is bringing a new, important, significant variable into the competitiveness equation for many businesses. The competition landscape is going to change. And unless we also position ourselves from the policy perspective and other perspectives properly, we may not be able to take full advantage of the African Continental Free Trade Area. Then also in the area of policy, we should also be looking at tax policy. We have seen some reforms in this area through the Finance Act that has been enacted. But again, that is just at the federal level. We need a tax environment at the state and local government level particularly from the point of view of small businesses, that will help to position them properly to be able to support employment generation and the growth of the economy. So these are some of the elements that we need to be looking at as far as policy reforms are concerned. Then there's the regulatory environment. That, again, we need some reforms in that area to ensure that the regulatory institutions also provide the necessary support for businesses, for the economy, to be able to accelerate the economic recovery that we seek to see. Because we see a situation many times where the regulatory agencies have almost practically transformed into revenue-generating agencies, where their main objective is to generate revenue rather than look at how they can support businesses or facilitate the growth of investment. So we need to look critically at the regulatory space and see how the regulatory agencies across all sectors and across levels, both at the state and federal level, also provide the necessary support for investment. And in a situation where they also lay less emphasis on revenue generation and provide a lot more support for businesses. Then there are also issues around the port environment. The port environment is a major issue for investors, especially those who require a huge amount of logistics. I'm talking of those who are essentially in the rail sector or those who are in the trading community. The port environment requires a great deal of reforms around especially the Nigeria Customs Service, around the shipping companies, the terminal operators, the issues of traffic around the ports, the issue of the quality of cargo handling equipment, the issue of use of technology in the international trade process, the issue of scanners, and all of these issues. These issues are very important if you are really serious about turning the economy around. Because this is where a lot of businesses interact, they interface a lot with the ports. And if things are not going right, if the frustration continues to get worse, then that may slow down the prospects of economic recovery. Then, of course, we have the infrastructure. Infrastructure, of course, there is no quick win around infrastructure. But we need to begin to see the right kind of steps, the right kind of reforms that will make infrastructure available to drive the capacity of this economy to recover very fast. We are seeing some reforms around the energy sector, which is around the electricity cost reflective tariff, which is good. And we are beginning to see some improvement around some of the performance in the electricity sector following the reforms. So we like to see the sustenance of reforms in the electricity sector. We are yet to see significant investment in road infrastructure because it's still heavily dependent on the budget. So we need to see how we can incorporate private sector support. The CBN is already putting up a fund, the Infraco platform, to support infrastructure investment in roads and rail system. We need to work a lot more in the area of broadband to support the adaptation or the use of technology in investment among SMEs and big corporates. So all of these things are the areas that we like to see reforms in order to accelerate the economic recovery process that we are seeking to see in 2021 and beyond.
Now, DG, some policies as hard or as difficult, as tough as 2020 was, there were some policy reforms that were instituted by the government. One is, you mentioned it, cost reflective tariff, that has to do with electricity. We also know about issues around subsidy and deregulation of the downstream. And of course, enactment of CAMA 2020, and of course, transmission of the PIB to the Senate and House of Representatives. But the issue around deregulation is what I want us to talk about. There's this argument of a monopolistic structure around the downstream. How does this come to you, DG?
Well, that is also an indication of some of the gaps that we currently are experiencing in the reform process. So we still need to perfect a whole lot of things. Because the whole idea of deregulation is to allow for increased participation of the private sector in the process. So if you have a deregulation regime that is still retaining a monopolistic structure, then that means that we are not yet there. But the good thing is that some steps have been taken, even though they are looking like baby steps, but we need to go further than that, to create a policy framework that will position the private sector to be the main driver of the sector. I can also understand the position of government because of the volatility around oil price and because of the socially sensitive nature of petroleum products. So these things require a very strategic approach, a very tactical approach, so that we also don't upset the social balance, and we also don't create an environment that will lead to unnecessary pushback or resistance from either labor or from the citizens. So it's something that has to be strategic. But it's important that the private sector is at the driver's seat. And I also agree with the government, it's an issue that we need to handle very, very carefully so that we don't trigger a pushback from the citizens. Because when you talk of petroleum products, especially given the current economic situation, given the current level of poverty, level of unemployment, given the challenges that small businesses are facing, given the fact that we still have a lot of issues with our electricity supply, we need to handle it carefully. But that is the way to go. We don't have any other choice, but we need to do it in a way that will be strategic, that will not create too much of a sudden shock, either on the citizens or on businesses. So that is the point that I will say.
DG, deepening investors' confidence is very key at this time with all of the challenges we face in this part of the world. The last figures we got from foreign capital inflows into the country stood at about $8.61 billion, a drop from about $20.19 billion. That's looking at the corresponding period. Now, what more can be done with all of these challenges? We also have insecurity. We're grappling with insecurity and all other issues that you've identified. How soon do you see investors, looking back even at the performance of our market, it was really impressive in 2020. Are we likely to sustain this with all of these challenges we face?
Well, first talking about the market that was impressive, we need to be careful about how we celebrate that, so that we are not celebrating a bubble. Because we have that performance, which has been widely celebrated, as being the best in the whole world. But we need to be sure that this performance was driven by the fundamentals of the companies themselves. But what has happened is that because of the unusual situation we had in the money market, in the fixed income market, in the treasury bills and bonds market, we had a massive migration into the equities or stock market. That is what has driven the rates, and that is what has led to the so-called best performance in the world. Because if the situation in money market normalizes, we are likely to see a reversal, we are likely to see a correction in some of these stock prices in the stock market. So we need to be very careful the way we celebrate the performance. And if you look at the rally in the stock market, maybe just about 10 companies are accounting for 80% of all of this performance. So the depth is not so much there. So that is it. But generally about the economy, I think what is important is to take all of these issues on board, engage properly with the stakeholders, and ensure that we are on the same page as far as all of these reforms are concerned. I believe that we talk about capital importation. Capital importation, first, is a function of the investment opportunities. And I don't have any doubt that this economy, in spite of all the challenges that you have enumerated, presents a whole lot of opportunities for investors. But it depends also critically on our foreign exchange policy. If the foreign exchange policy is not properly market focused, then it will have implications for capital importation. It will have implications for the transparency of transactions in the foreign exchange market. So a market-driven rate is very critical to promote the capital importation. You can see the drop that we have seen. I must admit that the CBN is already taking steps in this direction with what has been done with diaspora remittances. We expect that that should be replicated across all the levels of inflows. I'm talking about export proceeds. I'm talking about foreign direct inflows, foreign direct investment inflows. I'm talking about foreign portfolio inflows. So a liberalized access of these inflows is going to help a great deal in capital inflows into the economy, and it's going to help a great deal in moderating the stress in the foreign exchange market. It's going to moderate the depreciation in the Naira exchange rate. So these are the things that we need to do to ensure that we have much better performance as far as the capital importation is concerned.
DG, before I let you go, in 2 minutes, if we can do this in 2 minutes, budget 2021. Yes, it's timely, like everyone has said, and also accompanied with the finance bill and all of it. Funding this budget, the deficit is worrisome. Can we end up on that note? What do you make of this?
Well, the deficit is worrisome, and what is even more worrisome in recent years is the fact that the CBN is also a major player in financing the deficit, which is not good for our macroeconomic stability. It's not good for the inflation that we are trying to tackle. And when inflation continues to rise, it has implications for the welfare of the people. It has implications for poverty, because inflation weakens purchasing power and make people poorer. So the financing of deficit, we need to be more creative about it in order not to make it inflationary. We also need to work generally on revenue performance to create an environment where more revenue can be generated, not by stressing investors, but by ensuring that the economy grows. If the economy grows, if the GDP grows, then revenue will also grow. I think that is what is important. We have enumerated all the dimensions of investment environment issues that needs to be addressed.
Yeah.
So if government addresses that, we are likely to see an improvement in the growth of the economy. If the economy grows, revenue is also likely to grow. I think that is what the focus should be.
Dr. Muda Yusuf, I must thank you very much for your time. Director General, Lagos Chamber of Commerce and Industry.
Thank you very much.
All right then.